Hey, what's going on everyone? It's Griffin here and I hope you're all having a great day as always. So in today's video, we're going to be doing part 4 to the overrated, underrated series I started about a month and a half ago on the channel for the first time. The audience really seems to enjoy this type of more laid back vibe once in a while on the channel. So yeah, we're going to be doing some stocks where I'm going to be giving an overrated, underrated, and a quick little sort of memo about my thoughts on that individual company. But then also this time, quite a few of you ended up submitting more of a question format in my poll instead of just individual tickers. So for some of these topics, I'm also just going to be sharing my thoughts and speaking about them. So I really hope you enjoyed the video. If you do, make sure to smash the like button and let's get right into it. And just in case you missed the last episodes in this series, my girlfriend Sophie is going to be ringing off the topics and I'm going to be sharing my thoughts. So let's get right into the first one.
So the first question is, what are the best investments for people under 25?
All right, so this is definitely a hard question to give a blanket statement on because everyone's situation, both financial and pretty much in terms of their professional situation, is going to be different also. But from my own experience, I would say there's probably 2 courses of action you can take, or at least there's 3. The first one being literally just spend your time educating and reinvesting back into your education about financial literacy so that you know what you're talking about, and that way you'll actually be able to implement what you're learning later on in your life as you're building your asset column as well as increasing your income. The second element though, in terms of best investment to make under 25, I would say is probably saving up for that first down payment on a home and then purchasing either a home or a rental property, duplex, triplex, that you're going to be house hacking in. Hands down, this is one of the main ways I think a younger individual can get ahead financially earlier on in life because A, you're building up equity in a property, but then also there's the opportunity cost of the money that you're spending on rent each month is not just basically outflowing from your reserves, your cash reserves, and never to be seen again. This is money that even though you are from a monthly cash flow standpoint, taking that money and putting it towards your property, it's sort of like a forced savings account, and it also unlocks a whole bunch of other possibilities later on down the line once you have built a good amount of equity in your property and or the property has also appreciated in value. So that is one of the main things that I would recommend for someone who is under 25 if you're able to do so. And then the third thing obviously would be investing in the stock market. Now, once again, it's extremely difficult for me to give you an accurate depiction of what you should be looking to focus on in your portfolio's construction, but what I would say is, again, educate as much as possible and make sure you're actually crafting a portfolio that suits your needs as an investor and that you're able to look a bit longer term than what a lot of newer investors are doing in the market right now, just going for the highest returns possible in riskier positions. When you are just starting out, the capital you're starting out with is really valuable. Even if you're just starting with $5,000, it can take you potentially months at your first job or whatnot to actually build up that nest egg. So gambling it away on really risky and small cap stocks, for example, or cryptocurrencies is not something I would definitely recommend. I would focus on crafting something that actually will build a strong foundation for you for long-term growth.
And for the next question, what are your thoughts on Air Canada, and is it a buy right now?
All right, so for me, Air Canada, to be honest, if you've been watching my content for a while, you would know that I'm pretty bearish on Air Canada, but travel as a whole really, especially airlines in Canada. So the Canadian government is nowhere in sight is there going to be a reopening of air travel without any form of quarantine periods. And this is really the kicker for most individuals who are looking to travel, right? You can take an Air Canada flight out of the country, but there's risk that you won't be able to come back without proper quarantining and or even if you test positive outside of Canada. So really that's one of the main issues here. This company did just release their recent quarterly earnings. Pretty sure it was a $1.3 billion loss, which is just, that's incredible, honestly. And the CEO was begging the Trudeau government to reopen a quarantine-free air travel, and pretty much that's not going to happen anytime soon, especially with the rolling out of the vaccine for younger individuals like myself is pretty much, I think it's in like September. So yeah, this is not a stock that I'm interested in whatsoever as of right now. I think there's a lot more opportunity elsewhere in the time being. So yeah, this is not a stock that I would invest in, and this hasn't changed over the past couple of months.
And next is the Nasdaq 100.
All right, the Nasdaq 100 is hands down one of my favorite indexes. I've spoken about it countless times on the channel and for good reason. Now, over the past couple of months, there has been quite a bit of volatility because the Nasdaq 100, through its nature, is pretty much going to expose you to the largest tech stocks in the world that do trade, though, on the Nasdaq exchange. So we're talking about companies like Apple, Microsoft, Netflix, Google, etc., right? And over the past couple of months, there has been quite a bit of expansion followed with consolidation of these stocks. So yeah, returns over the past month or so for the Nasdaq 100 haven't been all that great, and I have had quite a few people asking me why I continue dollar cost averaging into this index, even considering the current volatility. But the thing is, this is what I would consider to be a core ETF, right? If you zoom out, newer investors are just way too concerned with 3 to 6 month returns. Like, it doesn't matter, right? If you're younger, if you're under 40 years old, honestly, and you're looking to grow your portfolio over at least a 10-year period, you just can't go wrong with the Nasdaq 100. Honestly, if you zoom out and you look at a 5, 10, 20-year period, average annual returns are just pretty much unparalleled for a passive investment. So yeah, I just love the Nasdaq 100, and it's an ETF that I continue seeing myself dollar cost averaging into every single month for the foreseeable future.
How do you find good tenants?
All right, so finding good tenants for my rental properties, in my experience as of right now, hasn't been all too difficult. This is mainly as a result, though, of the market that I'm operating in, where there is kind of a shortage of units available. So every time that I put a unit up for rent, I put it on Kijiji, Facebook Marketplace, and another platform called PadMapper, and every time within about 24 to 48 hours, I typically get at least over 100 applicants, making it quite a bit easier to pinpoint exactly what I'm looking for a tenant that will meet the criteria that I set out for my units. First thing that I always look for is a good credit score, as well as I pull the credit report so that I can get a broad view of the individual's credit lines, as well as their current balances and their history of payments. If I see a tenant that has a really high balance constantly and they're missing multiple payments, obviously that is a red flag for me. And the second thing I always do is I call their references, either current and past employers, current and past landlords. Those are typically the two main things that I will do for reference checks. And then finally, I also need the individual to be currently employed. This is the absolute minimum that an applicant has to hit, because otherwise, if they're not employed, they're not able to guarantee that they'll maintain their payments throughout the course of the lease period.
Can you have penny stocks in a TFSA?
Simple answer to this question, yes, absolutely, you can hold penny stocks in a TFSA. In fact, you can hold pretty much any stocks in your TFSA that trade on major exchanges, whether that be the TSX, the CSE, the NEO exchange, or even in the United States, you can hold positions that trade on foreign exchanges as well in the TFSA. However, what I will say about this is penny stocks, make sure that you are really confident in your overall thesis and assessment for that individual company, because the way a TFSA works, and I'm not going to get into full detail about this, but you can actually permanently gain and permanently lose contribution room in your TFSA, depending on if you sell a position at a major loss and you end up withdrawing that. So if you want more details, by the way, about this, make sure to check out the video that I'm overlaying right here. I go into a full detailed breakdown and calculation about how you can ensure that you are not losing out permanently on contribution room. But yes, you can hold penny stocks in a TFSA.
And next is NPI, RNW, renewables as a whole.
Yeah, okay, so NPI is a ticker symbol for Northland Power, and then RNW is a ticker symbol for TransAlta Renewables. And these are renewable energy stocks, green stocks essentially, that are producing energy through either wind, solar, hydroelectric. You get the picture, right? Straight off the bat, I'm going to say renewable energy, it is massively underrated, okay? I have spoken about renewable energy quite a bit on the channel over the past quarter, and right now we're seeing a massive consolidation in share price across the board for renewable energy stocks. Now, RNW and NPI specifically, pretty sure they're down like 20-25% a piece, and these are still really great companies to hold, and the dividend yield subsequently has gone up as a result of share prices going down. And if you are willing to hold on to these stocks longer term, I think they're a no-brainer, honestly, for a dividend stock as well as appreciation over time. This is something that I see a lot of investors struggle with, the concept of a stock going down in value over a short period of time and not looking at a larger global picture for the position, right? If you are willing to buy a stock at, say, $30 a share, well, this should have been as a result of looking at this stock at the current price point, current valuation, ratios, and a full global assessment of it, and for this reason you were comfortable buying into the stock at this price point. If it goes down in value by, say, $10, right, this should be an opportunity for you to lower your cost basis and continue buying further. Now, if your thesis has changed on the stock for a reason more than just the actual value going down, then of course you can reassess the position and its weight within your portfolio. But yeah, I'm seeing quite a few viewers commenting on my renewable energy video saying that these stocks are complete garbage, but no, they're not. Like, honestly, these are stocks and they're companies that are in an industry that's going to see massive expansion over the next 5-10 years. You can't expect these stocks to massively appreciate in value within such a short period of time. And I will argue this as well, right? On YouTube, I know a lot of people are looking for quicker, shorter gains, right? And so that's just kind of the nature of stock channels on YouTube. But okay, if you would say tell Warren Buffett 40 years ago to start a YouTube channel and track all of his investments, I guarantee you, like, over this course of time, stocks go like this, right? And if you actually zoom out, of course, now you look at the returns and you're like, holy cow, this guy is a genius. But this is over like 50 years of investing. Stocks go through cycles. They go through, like, markets as a whole go through cycles. It's completely normal to see certain industries and stocks go up and down in value. But yeah, so I know I went on a tangent there, but as a whole, I think renewable energy stocks are underrated, and right now, considering price points, could be an opportune time to look into buying into these price points.
And next is Bitcoin.
Okay, Bitcoin, honestly, what can I say about Bitcoin? It speaks for itself, the appreciation we've seen over the past 6 months or so. Bitcoin and ETH have just gone insane. I would say Bitcoin and Ethereum, if you are going to invest in a cryptocurrency, go with one of those. Obviously, there could potentially be quicker gains in one of these other altcoins, but I just think it is complete gambling with these smaller altcoins. Ethereum and Bitcoin are pretty much the standard, the gold, the silver of the crypto space. They are definitely here to stay, and whether or not, you know, it's hard to give any form of price prediction whatsoever. No one knows ultimately what these coins are going to be worth in even 3-6 months from now. And you're going to read articles left and right about how Ethereum is going to hit $50,000 within a year. No one knows, honestly. But I would say if you are interested in cryptocurrency, Bitcoin and Ethereum are going to be the way to go.
How can I make another income stream within the next 6 months?
Okay, this is a great question, and I'm really happy that you're focusing on trying to increase your income streams, because this is hands down the number one way that you can start increasing your savings rate and also, as a result of this, your investment rate. So there's pretty much 2 ways that you can categorize income streams, at least in my books. The first one being an active income stream, and this is going to be getting another job. Most likely that's not what you're looking to do though, or starting your own form of side hustle / business. Okay, there is an unreal amount of ways that you can create a side hustle, so I'm not going to go through them all in this video, but I will try to find some form of infographic and put it right here on the screen. Just pause the video and look at that, okay? Otherwise, the second category of income stream is going to be through your investments, and this can be either dividend stocks, it can be cash flowing real estate, it can be royalties from some form of IP that you sold or licensed to someone, okay? These are going to be quite a bit more difficult though to start creating, and it's going to take a lot more time to create momentum in them, because you have to actually invest quite a bit or a substantial amount of capital to create a smaller return. So I would say focus on the more active form for right now of creating another income stream through a side hustle. That's what I would say, and good luck to you. 6 months is definitely a it's a good amount of time, but I would say focus at least a year on some form of side hustle before jumping into something else, and also focus on a digital form of income stream, because through digital the scalability is a lot quicker than something that you're actually doing out in the physical world. Like if you were to go cut grass, essentially it's not as scalable, and with digital you can reach such a larger pool of individuals to buy your products.
The Canadian housing market.
Related to IKEA?
Kind of.
Okay. Canadian housing market, there's no way around it. It is, honestly, it's overrated. As much as right now I am actively investing in property, I am looking for deals, and it really has to be a deal. As a whole, the Canadian housing market right now, it is definitely overrated. Over the past 6 months, there's been a significant drop off in inventory, and this is what really has led to skyrocketing prices, because people do want to take advantage of the low interest rates. On a really basic, bare bones analysis of it, that's basically what ended up happening. Right now, though, in the month of April, I was looking at some articles that came out, or some data that is, about the housing market. There is an increase right now in inventory coming into the market. So I do think that over the next quarter, we are going to see some form of stabilization. And I am taking this in with open arms, because honestly, it has been horrible trying to buy property. Anyone who's also looking to buy property right now, you know the struggle. You're looking at like 10 people bidding on a property, and places are going for 100, 200K over. That is just not normal. So yeah, I do think there is going to be some form of stabilization. I don't necessarily think prices are going to go down. I just think because there's going to be more inventory, demand is going to be spread out a bit more on all these different properties. And so for this reason, I would expect to see a stabilization in the coming quarter. And if you're looking to buy your first property, maybe waiting out on this would be the best way to go. All right, so that wraps up the 4th episode in the Overrated Underrated series. It wasn't really an overrated underrated video today, but hopefully the answers to your questions provided you with some value. If it did, make sure to smash the like button. Also follow me on Instagram, because that is where I submit the polls, or the questions essentially for you, the question box for you to submit your answers for topics you would like to see. And I'll probably do another one of these in 2 to 3 weeks, most likely with a higher amount of actual stocks, so we can get back to the traditional model. If you're new to investing, I'd also recommend you check out the link down below to open up a Wealthsimple trade account. If you open it and fund it with an initial $100, you will get $25 for free. So thanks a lot for watching today's video, and I will see you in the next one.